Hey, Bulls and Bears, what is happening? Back with another dose of economic reality. And we've got an important update today. My Spidey sense is going off, and some things are happening in a broad macro view that we want to talk about here. We're going to talk about the fiat currency of the U.S. dollar as the world reserve currency. We're going to talk about the markets and a lot more here. But let's get into this here right now. First of all, it's Monday. Welcome back to the channel, everybody. Thank you for being here. Please do me a big favor. If you like these updates, please give a like and subscribe. It really helps out the channel, and that's all I ask for. And some of you do the extra mile, and you help out the channel with the donation button down there, the super thanks and all that. So thank you to those who do go that extra mile. But at least please thumbs up and subscribe if you're not already. Huge help. Thank you very much. Appreciate all of you for doing that. Let's get into it here. So we have a combination of a few things that are kind of raising the alarm bells on the strength of the U.S. dollar. Now, we did see a surge in the value of the U.S. dollar along the same time as tightening began. And we did see a drop, though, in the status of the dollar. In fact, it was a very big drop. The U.S. dollar had the largest single week drop this year just last week. And we saw at the same time, we saw gold and silver start to take off. We had silver in the upper $17 range. Now we're over $21 as of today. So we're looking for things happen, actually over $22, another 2% increase today, a little over $22 with silver. Gold's in at $17.76. Now we're looking for things to happen together to give us more confidence that what we're seeing is what we think is going to be happening. Now, we've always talked about how the U.S. dollar is a fiat currency, and it still is a fiat currency. It's not backed by gold. They can create as much as they want out of thin air, basically. But all other currencies in the world are the same. But now we have, I should say, the U.S. dollar has the threat of these other nations that are joining. And it started off with the Brics nations. We had Brazil, Russia, India, China, and South Africa, therefore the name Brics acronym, joining together to trade outside of the U.S. dollar, and gold is actually part of their finance system. Now, it's yet to be determined if it will be 100% or if there'll be other commodities in the basket of currencies that they're going to be using. So it's unfolding, but now we have some big announcements here. I'm going to tie this in with the financial markets here in just a minute. And this comes out of an article here. This is Asia Times. The name of it is "The Financial Reset is Near." And we're going to get into that a little bit here. But first of all, there's news that 12 other nations are going to be looking to join the Brics nations. So you're going to have well over half of the world's population now, if this goes through. The majority of the population is going to be under this alternate non-dollar system. And the dollar is not completely being dropped, but they're integrating other currencies, and including gold. So it's very interesting to watch this unfold. And there's a point when we start to see hyperinflation. I'm not saying that's what's happening right now, but we're seeing the markets go up quite a lot. Now, the Fed's out there, they're protecting the dollar, and of course, they're saying they want to fight inflation. That's been the talking point. But a big part of these rate increases is protecting the dollar, because the Fed knows, and they may not come out and say it, but the Fed knows that ultra low interest rates, trillion-dollar deficits, creating money out of thin air to no end, they know that ultimately that's going to erode trust in the U.S. dollar, and it's going to cause inflation. So I think they know that they are the main cause, the root cause. Of course, there's other things happening with the supply chains that they'll point to, and those are factors, but they're not as big of a factor as the fact that they're creating all this money, in my opinion. So there's going to be a point where when the dollar starts to lose its real value, and when the world loses trust in the dollar, and we're seeing that now with some of these other nations going outside the dollar, and a lot of these nations are nations that the U.S. has placed sanctions on. Of course, Russia is the most recent example. But these countries have been abused by the U.S. for a long time the U.S. having the world reserve currency, we've been kind of a bully around the world when it comes to our foreign policy, when it comes to our military intervention. And I'm not sure what your stance on pro-war, anti-war, or whatnot. Maybe you just don't care, but that's what's been happening as far as the U.S. around the globe. So now this is a threat to the U.S. dollar and to the U.S. And when you see markets start going up here, and we've talked about how there's been ups and downs in the market, but it's a lower highs and lower lows. It's been a bear market or a downtrend, as some would call it, as far as the financial markets, the stock market. All the indexes pretty much similar, not exactly the same, but moving in a similar fashion, ups and downs. Recently, we've seen this bear market bounce, as some are calling it. Some people call it a dead cat bounce. And I've said here that it would likely not eclipse the previous bounce that we saw just a few months ago. But it's starting to get to that point where we're only 8%, as far as the Dow Jones, only 8% off of the all-time high. And if we eclipse that previous high that we saw back in August, then that could be something to really keep an eye on. Now, today, as I'm reading this, we're in the negative. Markets are going to close here in about 20 minutes. But when you start to see gold and silver take off in conjunction with the stock market going up, it starts to look like the U.S. dollar is really coming under pressure. And when you combine that with the U.S. dollar index, and after the big drop, it's recovered some, but it's definitely something to keep an eye on. Combine that with these Brics nations now, expanding, other countries looking to join these nations, basically going against the U.S. And I think a lot of the Fed rate hikes are part of protecting the dollar, not just to fight inflation. Of course, those two go hand in hand, right? Fighting inflation and protecting the dollar. But there's a lot going on here. Now, a person from the Fed came out. This is Waller. And if you guys don't remember, the markets were very happy. The markets were overjoyed that the Fed was talking about unwinding the rate hikes or lowering the amount of rate hikes. So there was indication that the next rate hike might be 0.5%, and then after that would be 0.25%. So a reduction in the severity of these rate hikes had the markets, pumped up, and that's a big part of it. Now this Waller guy comes out. He says the inflation fight is not over. Interest rates will keep going up despite prices cooling by more than expected. Now that caused the markets to have not a so good reaction, and according to what I see right now, it's kind of put an end to the rally. Now we'll have to see what the close does and what happens tomorrow, but we're definitely at an inflection point here where things are going to really start being revealed. They're not going to just be interesting. It's going to be revealed the direction that we're headed in this economy. Are we headed into inflation, or will these rate hikes and the determination to keep the strength of the U.S. dollar intact, will that be enough to stave off this hyperinflation that a lot of us have been concerned about, right? So it's interesting, right? The U.S. dollar has been the reserve currency since the 1944 Bretton Woods Agreement. We came off the gold standard in 1971. It's been a completely unleashed currency ever since then with MMT, modern monetary theory. Basically the theory that you can just print as much money as you want to cover any deficits or to help out the people by sending out stimulus checks, and deficits don't matter. This is never been seen before, this level of money creation with a world reserve currency. And it's going to be, I think it's going to be painful. And I don't know exactly the direction it's going to unfold, but we can keep an eye on all these things, all these factors here. We're also going to look at the 10-year bond yield. Now today, the 10-year yield, just check on it real quick here. We are up 1.4%. We're up at 3.86%. And that's going to be another sign that we also need to keep an eye on here, and that's going to affect mortgage rates. Other news before we wrap up here, it is put out there now, and it is being implemented here, these layoffs from Amazon. Amazon announces 10,000 workers as soon as this week, 10,000 workers being laid off at once. Amazon, once the darling of the shutdown economy where so many people were stuck at home buying stuff online, a lot of small businesses crushed during that time. Amazon took off, and now ever since then we see $1 trillion, literally $1 trillion shedded from the value of Amazon. And now these layoffs, this is happening, folks, and it's going to get wild, it's going to get dangerous, it's going to get interesting. Crypto market still being crushed. We've got Bitcoin down close to 16,000 now. A lot of things to look at, a lot of things to keep an eye on, but we're going to keep an eye on it here for you. Please let me know what you're doing down in comments. I'm still preparing for higher prices down the road. Canned goods whenever I can. Quick story on that. Speaking of canned goods, this morning after dropping one of my kids off at school, went to a store here called Grocery Outlet. I'm not sure if they're nationwide, but there's a bunch of grocery outlets here in the western region. And it's my go-to store for canned goods, things like that. And today, talking to the checkout person, the same checkout person that's been there for many years, at least 5 years. 2 times already this year, there's been a crazed, appear to be homeless individual entering the store. Just last week, this checkout person had bottles thrown at her from this crazy homeless person. They didn't want to sell him alcohol because he was barely standing. It's interesting that a homeless person has money to buy alcohol, but that's a whole other topic. But it's getting dangerous out there. Homelessness getting worse. This cost of living is driving more people onto the street, and it's driving more people to drink. Have you heard the expression, you're going to drive me to drink? Like somebody that bothers you, you're going to drive me to drink. My parents used to say that to me when I was an annoying little brat. I'm still a brat. But anyways, driving somebody to drink. I think homelessness and poverty drive people to drink. Even people that weren't alcoholics tend to become alcoholics, and it's getting worse. And now we see this checkout person told me that, in 5 years, we've never seen so many people coming into the store, crazed, whatever you want to call them, mindless people. And this homeless epidemic out here, especially in California, is making it more dangerous. This person was almost ready to quit their job last week because they got a bottle, a wine bottle thrown at them, and they're just at work trying to do their job. I feel really bad for these people working in these stores that have to deal with the public when the public's becoming more and more unstable, more and more crazed, more and more unhinged. All right, so everybody be careful out there. Thank you for watching this report. What do you think about the grocery store lady, the story about the bottle? What do you think about the markets, the dollar, the Brics nations, gold and silver starting to take off? Is the U.S. dollar at the end of the line? Please let me know. And what are you doing to prepare? What are you stacking? Any silver like me? Any canned goods like me? Are you like me? All right. Thanks, everybody, for watching. Big love. Bye now.